Hello, everybody. My name is Paul Palmer. I'm a partner with First Bight. Veronica and I met back in 2021 in the height of COVID, so I'm sure everybody knows what that's like. And I joined First Bight the fall of 23, and we've been working together ever since. So what we want to do here is just kind of go through a little bit about what we're doing at First Bight, a little bit of Veronica's background, and kind of talk through that to share a little bit about what's exciting both of us about the sector, the industry, and so forth. So without further ado, I'm going to kick it off. So, Veronica, you and I have talked a lot about it, but I do think one of the things that attracted me to this whole opportunity is the uniqueness about kind of your background and what brought you to this. So, would you kind of share a little bit, about your experience at Motorola, Tesla, Apple, and so forth, and kind of what that all means to you and how you kind of use that to fall into the biomanufacturing sector?
Sure. And I think there are a few things. One of the very interesting things for my background, I think, for people who may have a little less history, is I was the one who discovered, if you will, Siri when it was still a technology and actually built what is even less known, a commercial prototype at Motorola first for Motorola. But Motorola did not have the operating platform to be able to take advantage of that technology. So that really taught me the first time the lesson of technology itself is not going to win.
Yeah.
It's not about the technology, it's about all the capabilities and the business model that need to go through when you have a paradigm shift
Yeah.
in a market. The second thing that I think is part of both scaling Apple, scaling Tesla, and later on also coming into the Valley, invested in AngelList to help this Chinese private equity to scale, is it is not about the history. In some ways, is the worst predictor of the future. So you cannot look into the history. What you can look at in Chinese, we call it um, the principles of change do not change.
Yeah.
It's not about the building a historic. It's about understanding the underlying. We call it first principle. First principle. What are the factors that drive the change? To be able to see into the future, what's going to be the next sort of, if you will, innovation. And when you think about whether it's Apple who brought mobility into the market, Tesla bring electric vehicle into the market, even Angelus, when we invested, is really about changing how to democratize access to top quality deals
Yep.
and enabling top quality operating angels to become eventually successful fund managers in that early stage where they can accumulate that track record in a platform. These are all paradigm shifting sort of models, and you need to look at how the the big macro forces that's creating that to enable that change and be able to now Angelus is probably one
Yeah.
of the largest platforms. So observing that change, understanding what's driving that change is really important. And the last thing is it's also about exponential thinking because most people don't realize that when we talk about exponential thinking is usually technology happens the early stage of that technology is very slow, and we say people tend to be over optimistic about the short term, underestimate the long term, right? That's typical. That's because things happen exponentially,
Yeah.
not linearly, right? So a technology like computing started in the 50s. It took a long time before internet become sort of prevalent, before the cost become. But once that cost hit a certain point and consumers can access the device, like mobile devices, there's lots of factors, then it just went through the roof
Yeah.
and it really inflected, right? So understanding how long things could gestate and understanding when that inflection point, what are the different forces that come together to create that inflection point. So from an investment perspective, you try to invest before the inflection, but not too early.
Yeah.
And that's really important. So those are the three things I think from my career, I really felt I learned about what causes inflection, when does inflection happen, and how do you tell the big forces that are the sufficient conditions to enable that.
Yeah. Well, and that's one of the things that, we've talked about this that I find interesting about First Bite is it's kind of an outsiders looking in and trying to look into what the biologists are doing and then how do you get them to commercialize, and how do you take advantage of that inflection. And we have biologists on staff that are helping us with the technology, but having an outside in view of the world and where it's all headed, I think is very interesting. And that's one of the things you and I talk about all the time. So
Yeah, exactly. If you apply that principle, biology
yep,
has been,
yep,
we discovered the first genome in the 1950s, and we've actually sequenced the first genome in the 2000s. So it has been gestating,
yep,
and the cost of biology now, we talk about a million times, 100,000 times, just significantly lower than in the last 20, 30 years. With the advancement of computing, again, it continues to actually drive that cost down. So a number of those, when we talk about inflection points, and when you think about people's awareness, consumer, right,
yeah, yeah,
being aware of the health risk that comes from petroleum-based chemicals and the toxicity, all of these have been building, but now it's becoming more widely known. So
yeah,
these are all forces that helps to create that inflection point. And as we think about also data, where's, if computing becomes so cheap, where is it going to unlock more value?
yeah, yeah.
Really, biology is one of the largest data sets out there, right? So for the tools developed to unlock value, that's going to be where things are going
Yeah.
to go.
Well, so you've talked a little bit about your background. Obviously, you have no passion for this whatsoever. So, talk a little bit about what got you specifically into the bioindustrial biomanufacturing side. What was that story like? You've already started hitting on biology a little bit and so forth, but talk to us a little bit about what got you into this your new phase of
Yeah.
life.
Well, so when you look at, we talked about, the forces that really need to happen for there to be an opportunity. But once there is opportunity, you need to operationalize it. How do you capture?
Yep.
One of the things I think was also, we're beneficial in that, as sort of Nietzsche say, we stand on the shoulders of giants. So we really do. In the last, I would say, 2 decades, there hasn't been a lack of effort to try to convert things into biology, and there's been successes. And if you
Yep.
think about insulin is a great success. Malaria, the vaccine for malaria is a great success for biomanufacturing. So this is not a new technology that people need to understand. This actually had gestation already in terms of, and it really saves costs. It's proven in the pharma space, we can be much more cost effective in extracting, producing drugs. We're starting to see how we can apply it for, and in fact, even beer and wine, and
Bread, my
that's
favorite
yeah,
bread.
exactly, bread. That's all biomanufacturing, right? So when we think about um, this technology, it's actually had years and decades of development. When you look at the science and the, thanks to the pharma actually industry, there's been a lot of investment in biology and in tools to help us to develop more biology. When you look at the investments, the biofuel is the first into industrial, and lots of failures, but we learned enormous amount of what the challenges are for scaling to industrial scale. And uh, for instance, product market fit is a big deal, and you can't just expect biology as a new technology. Just like Tesla did not launch the cheapest car, they launched the most expensive car to go into. That's what you need to go find where there's value creation and it's economical for you to actually create an example for that, not to go after fuel, which is so cheap.
Yeah.
And petroleum has already figured out how to make it at large scale infrastructure to support it, because that requires industry change. So getting the right product market fit is really, really important. So that's one of the reasons that I've learned, looking at all those failures, I feel like we've learned a lot, but the challenge continues to be in industrial. How do you scale?
Yeah.
Biology's cost is there, but the downstream and to get it to a product like a chemical, that's not, a lot of people think it's engineering, and it is, but it's not to be dismissed. It's actually significant, because we're talking about also hundreds of millions and billions of infrastructure investment to come along and to enable that. And bring that together, a scientist alone or a particular technology is not going to help to make that commercialized. That happens to be something I've done. A
Yeah.
lot, whether it's Motorola, Apple, or Tesla, they all had very sophisticated supply chain. I had an industrial engineering background as well, understanding that supply chain. So I just felt to unlock all of that innovation in biology and commercializing them into scale, which is the industrial side of it, requires someone who understands how to bring all of that together.
Okay. Well, that's so you went through quite a bit there. So obviously, there's lots of different components of this sector. All the way from bread to chemicals. So it's a big space. To talk a little bit about the market space, the market potential, and where you think this disruption is going to happen around all of this, and how is First Bite going to be part of that?
Yeah. So fundamentally, it's a massive space. Otherwise, it's not worth investing,
Yeah.
right? So it has to be a massive space. So when you look at just chemicals alone, this covers, like we talked about, personal care. So it's the cosmetics, it's the food ingredients, it is the industrial everyday, the things that for coating the leather, all the way to all these coatings on the materials and things we drink and eat. That is a $6 trillion market alone, just in chemicals. Then you will layer it onto agriculture, agrochemicals, because we use a lot of pesticides, fungicides, and all kind of catalysts to enable growth. And now, if we can use biology, that could be a lot. We understand the toxicity in terms of the food and go into the agriculture, and this could be huge. That's a $14 billion industry. And then there's manufacturing. And if
Yeah.
we were able to change manufacturing, that's another 14 billion, because manufacturing through biomanufacturing is a very different process. It's
Yeah.
another 14 billion trillion dollar market. So we're talking about tens of trillions of dollars of potential opportunity to apply these technologies, and that is a massive market from an investment perspective.
Yeah. Well, and I guess when you start talking about the market too, you ultimately get down to the consumer. So there's lots of different things there, and as we talk about, we don't think of just consumers from the perspective of humans. It's organizations, it's governments, and things along the lines of that. How do you kind of see this from your perspective, and what you're seeing already from your first fund rolling out on both the human side as well as the government or organizations and company side, is what's coming for them and what are they trying to do with it?
I think the first part of it is really we're looking at human health. Just how do we increasingly we're starting to aware how traditional chemical creates air pollutions,
Yep.
creates microplastics, right? So that our environment or Earth that doesn't know how to digest, if you will. It's almost like a person with indigestion. So, and these creates health issues,
Yep.
right? Like it really impacts people and humanity. So how do we best get rid of that? And biomanufacturing of these chemicals and changing that manufacturing process. We're not going to actually change if all we do is how we treat it in the end, because a lot of the focus has been doing recycling, but this is really changing how we make them. And fundamentally, we make them differently. They don't have microplastics. The process is not toxic. It's not going to have those impacts. And think about in bio, really manufacturing is kind of like the Earth. That is the technology of our planet,
Yeah.
right? So we're using that process, and then the planet will be the cheapest recycling plant and take care of the materials. We can toss it back to the environment. So yes, we're changing manufacturing, but in the end, for people, it's actually very easy to adopt. And Earth is no problem, because it is their Earth's own technology, right?
Yeah.
So when we talk about that, is definitely something I think we are seeing increasing awareness of consumers and corporates. We're already seeing corporates making commitments, and certainly RFK just outlawed, and there's a lot of regulatory, not just in the U.S., that's starting to outlaw these toxic and petrochemicals. That's going to help to these policies are going to make it very clear for businesses, because businesses exist to make profit. And if they can't make profit in one way, they have to find alternatives. And bio becomes that natural alternative for a lot of these large businesses who are looking for new ways to generate or recoup that loss of business that they need to bring. And thirdly, I think from one of the things that COVID, we were talking about how we met in COVID, but COVID also made it very clear to the rest of the world and is supply chain resilience. It's
Yeah.
important. Having local domestic capacity to manufacture key materials and key raw materials is super important. And these chemicals that we need every day for our living, we need to have domestic capacity to do it. And biomanufacturing brings that. Before, I think we got rid of it, certainly in the US, because of the pollution and all that.
Yeah.
But now, if we're going to bring it back, let's bring back biomanufacturing because it's clean, it creates jobs, and guess what? It's not toxic for anybody, and it helps from a national security and resilience perspective.
Yeah, yeah. So you talked about both the consumer side and how consumers are driving through this. You talked a little bit about government and their intervention and defense and so forth. Talk a little bit more about what the government is actually doing. I know we're seeing you mentioned the stuff that the FDA is doing, but obviously we're seeing a lot more from a government intervention perspective, not from the doling out credits like we've seen in the biofuels space, but more how do we innovate, how do we push innovation forward, how do we push commercialization forward. What are you seeing there, and where do you think that's going?
Yeah, so I think the U.S. government right now, especially, is very interested because of the national security concerns, especially with certain chemicals. And even in our portfolio, we have portfolio companies who are producing using biomanufacturing process to produce chemicals that are 98, 99% right now coming from outside the country,
Yeah,
right? And,
yeah,
and coming from probably not friendly countries,
yeah,
right?
yeah. Fair enough.
China produces 50% of the chemicals in the world, so we already know that. So and so that is one area that DoD has come into pretty heavily in terms of supporting into how do we build domestic capacity for these chemicals.
Yep.
And DoD has started to put funding around it. And certainly with the new bill that's out there, it is helping manufacturing companies to uh, write to be able to write off their investment in capex, and as well as there's more programs, increasingly more programs in terms of supporting job creation, supporting the capex, because this is going to be a capex heavy
Heavy. Yep.
industry, and there's no question about it. And one of the things I think also has been, we talk about failures or lessons learned, is that we have been trying to finance a lot of that capex through equity capital, and that's
Yep.
probably not the best way to do it, because it doesn't justify the return. So if we want to make this a profitable investment for investors, we're going to have to leverage all these opportunities, both government grants and making sure that we have structured the capital stack properly, and to help make sure that there is, despite the fact that it's capex, it's not too equity
Yeah,
capital
yeah,
heavy.
yeah. Well, and that's, you and I talk about this all the time. It's one of the nice parts about this now is the government is getting involved, and it's such a broad-based initiative that it's bipartisan. So everybody is really on board because it does impact defense, it impacts human health, it impacts infrastructure. It's just a kind of across the board. So, so, so the next thing I'm going to get into a little bit is First Byte. So First Byte is, as we said in the introduction, a venture firm. So a couple of things that people always talk about around venture firms is how do you manage risk, and then how do you differentiate yourself. That was a big word.
Yeah.
Differentiate yourself in the marketplace from the other VCs that are out there, and you talked a little bit a second ago about what the capital stack and where do you put the money, and so how do you manage through that risk, how do you manage through differentiating First Byte in the marketplace.
Yeah, there are a few
I
things
know
we,
that's a big
yeah,
question.
it's a bit, but I'll summarize it to make it simple. There's three things we do very differently that we think that in some ways is very different from what the industry had traditionally tried to solve. The first thing we do that's different is we actually specialize. And that was one of the things when we talk to people, like, is this big enough? Well, we already talked about the opportunity is definitely big enough, but it is not a playbook you can just take from any other industry.
Yeah.
It's a very different industry. So you have to specialize in order to make sure that you understand the operating challenges, the implementation, execution, because and you have to understand all the different, like we talked about, the capital structuring, And then we talked about the technical challenges and the downstream challenges. Those are specialties that we need to develop, and you can't just go too broad. This is a deep vertical, and is a very technically challenged vertical. So we need to be deep and developing deep insights and understanding how to assess the technology, how to understand the manufacturability of that product, and also understand the market. Is there a market? So one of the things we first do is look at commercial viability. That means the technology, it's not just like I can do it, but we have to understand what's the cost of doing it. Is there a supply chain that supports it? Those are the things that we assess to say, is this technology commercializable?
Yeah.
And one of the key things we also put out is what's the likely cost for the product that this technology is going to produce, and is it going to be able to, do we believe it's going to reach cost parity in the end with all the benefits? But if you're 10 times more expensive, nobody will buy it, right?
Nobody's buying.
It has to. And part of the reason also why we focus so much on drop-in chemical replacement, because we're not taking product market risk. It's very easy for us to see what the market is, and that helps us to build confidence. And we'll take the engineering risk, but we're not taking product market risk. We're not focused on that novel product, because there's such a long supply chain in order to build that novel molecule to be integrated into anything. And so we want to make sure that we're producing returns for investors from that perspective. Second thing we do that's very different is because we build so much expertise, we're very much hands-on. We take lead. We define the term sheet. We define the valuation. We come in. We take board seats. We get very hands-on from every aspect. We get involved in every aspect, from sourcing a particular component to sourcing equipment to actually helping them building strategic partnerships and looking at financial distance, setting up the board discipline, recruiting the commercial team, because a lot of them start as a scientific team. They need the commercial capability. They need to hire their first chief business officer, things like that. So those are things that we get very hands-on. We don't just go and do a quarterly board meeting. That's not going to be very helpful to these entrepreneurs. And lastly, we talked about capital structure. We're very, very conscious that in order to deliver, this is a CapEx, we talked about this CapEx intensive industry, but there are solutions that we can actually go find a path where it could be equity capital efficient, because a lot of the CapEx are in the equipment, in the infrastructure. How do we build that capital stack and partnership and consortium of capital, to including government funding, to help these companies to, as they scale, to use the right capital to finance the right components of that, so we can deliver that final return for investors.
Well, you've taken all my questions away, but we'll see what we can come back with some more. So you covered a lot of things there. You talked about supply chain, you talked about CapEx intensive nature, experts, and things along the lines of that. And one of the things that we talk about all of the time is, how do you collaborate with corporations? Because at the end of the day, as an example, you talked about supply chain. Supply chains don't come apart and go back together easily, and the corporations are the ones that really understand them, understand what it's going to take, understand where products will fit into their supply chain for the ultimate consumer and stuff like that. Where do you see the corporates playing in a role around this kind of in this industry?
Well, to your point, I think corporations have these, especially big manufacturing corporations and sort of brand owners. There are two things that they're much better at. One is they understand where consumer market is going, and two is they understand the supply chain. So a lot of times, one of the things as an industrial engineer, I was trained, design for manufacturability is really important. So we bring them in really early. As we are validating the science and validating the technology, we actually want to engage with a lot of these corporates early on to say, is there a market? What is that market? How big is that market? What's the feedstock? Is the feedstock actually industrializable at scale? And do you see this supply chain actually, can we actually get this done with this technology, right? So we spent a lot of time working with different corporate partners to understand their need, understand how they see market, and to understand what specific applications they are really interested in, as well as their supply chain manufacturability to help us to establish and assess manufacturability. And that's the first thing that we love to kind of get these corporate, and we often create these corporate partnerships there. The second thing that we do with corporate is, because once we provide that matching of engagement, we help the startups and the corporate to set up the right partnership model so that they are both, it is a lot of heavy lifting in to get a company from that lab technology to scale to a point where the corporate is willing to sort of take on and scale it. So during that phase, we spend a lot of time making sure the communications are coming in, their technical know-hows, but also the startups are structuring that partnership in an effective way that it really mutually is beneficial.
Yeah.
So we bring them either as a strategic investor, or they could do a joint development agreement, or they could do an offtake agreement, depending on what they can contribute, to really help de-risk most the commercialization path.
Yeah. And you hit on some of this, but one of the things that we do talk about often, right, is I think that people don't truly understand the order of magnitude of how much this needs to be produced. How much chemical do you actually need to be in the industry, to be a player, to make a significant contribution? And without having a corporate collaborator who can help you to understand what that looks like, how are you going to commercialize it? How are you going to get cost parity, as you've mentioned multiple times? How are you going to get to that point? It's very hard, I think, for the layperson to imagine the order of magnitude of what that looks like. So I think that's always a critical component of it as well. The other thing, and you've touched on this a couple of times, but I think it is important as well, is the capex side. I think it's also similar to what we were talking about, just the sheer volume. Capex in this industry, we've spent, if you look at the petrochemical infrastructure, we spent 125 years refining the petrochemical industry, and that's not going to go away tomorrow. And if we're going to try and build something alongside of it, it's not going to happen on Tuesday.
Yes.
So how do you work with companies to come up with a strategy and think through the deployment of capex? Because you already talked about the capital stack and how it's not necessarily efficient to raise money to build large infrastructure. Talk a little bit more about the capex that you think is going to roll out, and how we kind of work with companies, as you say, kind of hand to hand combat with them to really deploy their capital best around what capex they do need and what they can use from others.
Yeah, there's a couple of things that's kind of helping, and we talked about some of these tailwinds that we're seeing. One is the government, thankfully, and it's not just the U.S. government.
Yeah.
Lots of governments are willing to support in building of that first of its kind plant, because it creates jobs, and it helps with, and it's a capex, is a piece of asset that people could own, so it help to de-risk that capital. And certainly we, out of our Fund One portfolio, 3 of them are in the defense
Don't
industrial.
jump ahead. We're going to talk about a case study in a second.
Yeah.
So just don't
But
take over my questions.
yeah, but I want to kind of lay that out. So the
Yeah.
defense industrial base consortium in the U.S., it's a DoD funded. They are providing
Yep.
funding to startups that are building bio-based chemicals, especially where it's strategically important to this country to have
Yeah.
domestic, and they're providing additional funding for that. We're seeing local governments, states,
Yep.
in the US as well, that's starting to actually invest in providing incentives for setting up these infrastructures, because they understand it creates jobs,
Yeah.
and it's business growth. And we've had conversations, right, with even Texas, the east part of Texas, we have lots of wood pulps.
Yeah.
So, and we have a lot of growth soil in near Houston. So there's a lot of waste materials, and that if we can commercialize it, that's going to create more economic. So there's a lot of economic incentives that why it would make sense to help to commercialize these technologies, and that could create new business growth.
Yep.
For the region as well. Those are things I see are things. And then if you partner with the right partner, in that, like a corporate, in doing it. So rather than the startups, one of the things we really feel like, it's not the startups who's going to build the plant.
Yeah. Yeah.
But if the startup works with a partner who understands how to build that plant, know how to operate that plant, Now, that partnership could be very, very helpful to also de-risk, and that makes then all of a sudden banks or other credit players are
Yeah.
willing to come in and offer, because now it's not the startups who's building it, it's a major corporation who's building that piece of asset.
Yeah.
Then there's interest because those large corporations are multi-year. They have balance sheet
Yeah.
that could actually deal with that risk. So as corporates become more interested in this, we're seeing the more that we can build those type of partnerships and building that first of its kind. Once the first of kind is built, now it becomes a lot easier to replicate that.
Well, it's a second supply chain, right? We talk a lot about the supply chain within the chemical and within the manufacturing base, but there is the supply chain within the cap stack. Is how do you deploy equity? How do you deploy credit? How do you partner with others for infrastructure and so on and so forth? And that is, as you mentioned at the very beginning, it's almost a parallel path. We're not only innovating from the biology and the chemical side, but we're also going to have to innovate from the infrastructure side, because a lot of this technology is new and it's going to require new technology to build the manufacturing facilities and so forth. So now I'm going to go to the question that I told you not to take away from me. So obviously you've got your first fund, and you've got some really interesting companies in there. We've talked about a lot of things today. We obviously talked about some of the market tailwinds. What is the market doing? We talked about government. We've talked about consumers. We've talked about how you are managing risk, how you're managing the cap stack, and you're bringing in corporate collaboration. So, can you talk through a case study of one of your companies in Fund One that kind of ties all of that we've been talking about so far together to really show what it looks like in action?
Yeah, that's a perfect
Is that a
layup, I
setup for
think.
you? Was that a good
Yeah.
enough setup?
So the first, I mean, the easiest like comes to mind is this company called Genesis, right? And what their technology is really is they can produce a microplastic-free polyurethane, and polyurethane itself is massive market, $70 billion
Yeah.
market annually.
They
Right?
might be in those chairs we're sitting
Yes, in the phone,
in.
and it's in everything.
Yes.
So this company has a unique formulation as well as a unique technology that they're able to actually make 100% bio-based and 100% microplastic free polyurethane. Their technology is isocyanate. It's a bio-based isocyanate. They're the only company who can actually right now has that IP on a bio-based isocyanate, and then they have a proprietary formulation for the polyol. And because polyurethane
Yep.
is basically made through the polyol and mixed with isocyanate. Today, they already have a polyol that's basically a polyurethane version of their polyurethane that's using petroleum-based isocyanate that's on the market. They were able to make it 100% microplastic free, and they actually already are selling it and use with selected brand owners into products. They have been supported by, we talked about the technology, DoD and DOE grants in terms of scaling the pilot facility. They're at 1 to 3 kilograms a day right now. They're looking to scale to 10 kilogram a day, and they're now part of the DIBC program, as we mentioned
Yep.
before, Defense Industrial Base program, and they could qualify for 50, 100 million in building that demonstration plant. They're looking to build a 10,000 ton isocyanate plant to demonstrate the ability to and the economics of the isocyanate. And one
Yep.
of the great things we talked about resilience is because they use flow chemistry in their process, and their feedstock is just any kind of oil, fat, fats like seed oil that we know are bad for humans, but we can use it for this.
Good for fun.
And vegetable oil, all kinds of stuff. They can use any kind of those waste oils and be able to convert it into a productive um, to into polyurethane that they're formulating. So this is a great example of how we're leveraging non-dilutive dollars. The
Yep.
company totally now has received over 20 million in non-dilutive dollars. Equity dollars has only been like 7 to 8 million, and they already have big corporates like Trelleborg. They have a partner in Taiwan, Diamond Group, who is one of the largest. If you have a phone case
Yeah.
manufacturer, they use a lot of polyurethane, and they're going to look at commercialize using delivering a phone case that's built out of their polyurethane, that's going to be microplastic free. So, and they've been talking to large also sneaker manufacturers, furniture manufacturers in terms of how they're going to go scale this.
Yeah, that's great. That really, again, I think is a great example of all of the things we've talked about. We talked about how, the government intervention is really coming to the table to help commercialize. Talked about the economics, and that we've got to get it down to the point where it's competitive in the marketplace, because nobody's going to pay $10 for a phone case when they can get one for $2. And it talks about, the innovation that's going on, and it addresses the fact that we've got a really large base that we're going after. So we think that the opportunity is there, and it mitigates the risk. And then it talks to the cap stack that we've been banging on about as well. So no, I think that's a great example. So, and to kind of follow on with that, and this kind of goes back a little bit to your origin story and what we've been talking about, and how trying to be an outsider looking in, and how do we really make change, and what, as I always used to say, is how do you look around the corner and see what's coming next? What do we think that this looks like from a future perspective? What is it going to really take? What are the bold takes, the future vision of where this industry could, or this sector could go?
I think the biggest, or if you like say 30 years from now, one of the things, or 30, 40 years from now, one of the things we could look at is we can have, I call it, because we change how everything is made, we actually can have a better, everything in our physical environment will change in
Yep.
terms of the basic components. So think about how, but it's still going to look exactly the same, right? it From a consumer perspective, you don't have to change your behaviors, but you will have much better assurance that everything you touches is not going to be toxic to you. The things that you wear, things that you use is not going to be toxic to your health, and they're made
Yeah.
with the right, and we're not going to see pollutions in the air, because we're going to be wanting to build these plants,
Yeah.
and so that we can have more and make everybody's life even quality even better, because they are affordable, they're clean, they're non-toxic.
Yeah. Yeah. And one of the things that I've always liked saying too, since we live not far from the NASA, is, if you really look forward, everybody loves to talk about space. And last time I looked, if we really want to go to Mars, I don't think anybody can dial up Amazon and get the shipment on Tuesday when they need to get a product. So how, to me, this also visions out to that point where you're going to have to come up with a way of making products off planet to be sustainable, because you're probably not going to be drilling for oil on Mars either. So that's one of the things that I always look at.
Yeah.
So again, we're a venture capital firm, First Bight. How can people, corporations, individuals kind of lean in and help us get involved with what we're doing, get involved themselves, and so forth?
Yeah, we love to get more people, because with this sector, we really think it's that important for humanity. We love to have more people to learn about what we're doing, and learn about this sector and get involved. So we are publishing a set of tools in on our website, making them available. The due diligence, DDQ. We're making a whole meta-analysis, a report on what the sector is all about, what are some of the big technology trends. That's an asset that's available free for people to download. We also talk about the lessons learned,
Yep.
as well as these are important especially for investors to know, things to avoid, and even for startups, right? It's things that you should avoid if you're thinking you want to take your company to success. That's not things that you should do. And certainly we're making the masterclass of this video available to on site. In addition, we have monthly newsletters, and that we're going to be signing out. If you want to keep your updated on what's going on, how our portfolio is doing, sign up to our newsletter. And certainly we're always open and sort of just reach out. Where, we can
Yeah.
be reach out at email investor@firstbyte.com. Reach out and tell us what you want to, if you want to talk to us and learn more.
Great. I appreciate your time. It's not that we don't talk very often anyway,
Yeah.
but thanks for sitting down and let me kind of run through this. I appreciate the audience for hanging in there, going through all this stuff. As you can tell, we're really passionate about this. I'd love to talk to you more. Come and hit us up. We love to educate. It's one of our big goals. Come visit our site, call us. We'd love to have another conversation with you. Thanks for coming.
Thanks.